So there are kind of three types of impact from supply from the trade wars. I'll talk a bit more specifically about what I mean about the tariffs and trade wars. I think most people are probably pretty familiar with it. Um, uh, there are strategic consequences, operational consequences, and ecosystem consequences. So when we talk about strategic consequences, we're really talking particularly about market consequences. So where companies are having to look for new markets for their products because they're finding that in some of their existing markets, they're facing barriers to entry, tariffs, controls, etc. Then there are operational consequences, which are so that's really where we're talking about the supply chain, where they're needing to look to different suppliers to build their products and services or supply their products and services. And then there's the broader impact on the general business ecosystem, and that's looking more broadly at the situation. Um, uh, um, and their strategy. So things like should we still be operating in the same way as we were before? Does our business make sense now in this new environment? Should we be looking at different markets? Should we be doing things in a different way? So those kind of broader considerations where you need to reassess the whole approach. That's what we cover there. But today we're really focusing particularly on the more operational side, which is looking to strengthen and improve your supply chain in the light of the current tariff situation. So I think if we look back at the try and see this in the bigger view, I think we can go back to the existing trade environment. So this largely liberalized, fairly low tariff environment. Changed a bit in 2016 with Trump's first term and the first set of tariffs that were placed on China. But broadly speaking, I think you can talk about a post Second World War consensus. So going back to the 1950s, where we've lived in a fairly low friction, low tariff environment, and that has been one of the major drivers of an ongoing economic boom. Definitely more in some places than others. Definitely not perfect and not continuous, but generally speaking, it's been, I think most economists agree, it's been a big driver of growth and of globalization of different of new countries coming into the global economy. And that's been driven by much more complex and integrated supply chains and much better supply chain management. Technology has come to play a much bigger role in supply chains. People have been able to look at a much broader range of options for their supply chains. And then, yes, the growth of certain highly export-driven economies like Germany and particularly China and other parts of Southeast Asia. Generally, the tariffs have been low, led by the US, which is the world's biggest market at about 1.5%. But with some exceptions, generally tariffs have been historically low in that period, and that's been the background to the kind of global economic expansion and some people would argue, relative peace of the post-Second World War period. And then yes, there have been organisations that play a critical role in that, supporting that and helping resolve disputes as they come up, so that they don't tend to escalate to the kind of levels that we've seen more recently. All that changed a little bit on 2nd of April with Liberation Day. So these very so we yeah, so very strong changes. I think, is this the sort of intermediary slide, Soumya? So yeah, there was some tariffs started to be implemented sooner, but then yeah, on Liberation Day we saw these very high tariffs of 145% on China. There were already some tariffs from the start of Trump's new administration on Canada and Mexico, which shouldn't be underestimated. They're very significant as well, and they're some of the biggest trading partners for the US. But the focus has been particularly on the China tariffs, which are really at a level which are unsustainable for doing business at 145% in one direction. China and other countries have reciprocated. And yeah, it's a major sort of supply shock. There was a dramatic drop in financial markets, a spike in the yields of American bonds, so a drop in the value of American bonds. Yeah, an extreme reaction to a fairly extreme policy. Next slide. Things have pulled back a bit from there. So we've seen temporary settlements with China, some starting of some deals with places like the UK. The main body of reciprocal tariffs across 60 or more countries, 180 countries or something, has been postponed by 90 days, and I don't think anyone expects it, or most people don't expect it to come back in quite the same level. But I think the critical thing is that it's still a very different environment than it was pre Trump's second term, pre-Liberation Day. And there are significant tariffs in place. Those are likely to continue. It is part of the stated policy of the US government. There will be reciprocal tariffs from other countries, and therefore the overall environment has changed, and the predictability and stability of the trade environment has changed. There's also the potential that a kind of Rubicon has been crossed, and other countries there'll be more trade tensions between different countries, not just between the US and others, going forward as this becomes a kind of normalized means of competition and potentially to some extent aggression between different countries. So I don't think anyone is expecting a return to complete normalcy in a short term, which means enterprises need to really be thinking about how they deal with the new environment. So the Business Research Company can help with this. They can identify markets to focus on. They can help you track all the tariff implications and all the latest changes, and they can help you to evaluate supplier ecosystems to choose the correct supplier, and that's what we're going to particularly talk about today.